Hey, what's up, everybody? It's Doug Shoemaker with the Shoemaker Loan Team at Homestead Financial Mortgage, and I'm back with your weekly market update. Each week, I'll do my best to take the top mortgage and housing news and deliver it in 1 minute or less for my friends that just want to know what time it is. Then, for my friends that like to know how the clock works, we'll dive into all the juicy details and, of course, give some rate lock and float advice. So let's go ahead and get to it. Private payrolls finally showed a little bit of life in October. They added 42,000 jobs according to ADP. Now, that's after 2 straight months of losses, so it was definitely a step in the right direction, though overall growth is still fairly modest. Meanwhile, home prices are holding firm. Cotality reports home values are up 1.2% year over year, and they're actually now forecasting a 4.1% gain over the next 12 months, and that's up from their last projection, which was 3.9%. On the mortgage rate front, national averages from Mortgage News Daily, they show the 30-year fixed rate sitting around 6.34%. FHA was 6.06 and VA was 6.08. All right, for the technical picture this week, if we see mortgage-backed securities open below this 50-day moving average in the morning, we could see lenders start to reprice for the negative. So we're hoping that we'll see them open above these lines here. I'll give you more details in the final report, or make sure you check in tomorrow. Now, we're pretty much at a floating status, both under and over 15 days. The bond market did not close so well today, so make sure your lender's close by if you are closing within that 15-day period. Now, that's it for everybody who just wants to know what time it is. Let's go ahead and dive in now for my friends who like to know how the clock works. So, private sector job growth rebounds. It remains pretty modest. The ADP unemployment report, it showed 42,000 private sector jobs were added in October, and that was topping the expectations of 24,000. So it's a welcome change after losses in both August and September, but it's still far from strong growth. Breaking that down a little bit further, small firms lost about 10,000 jobs, medium-sized companies lost about 21,000, but large companies of 500 plus employees, they added 73,000 jobs in total over the last 3 months. And the private sector added just 10,000 jobs. So wage growth is also cooling a bit. Job switchers saw 6.7% as an annual increase, while those that stuck back with their prior job, they saw 4.5%. And both of those were fairly unchanged from last month. ADP's chief economist, Dr. Nella Richardson, summed it up pretty much perfectly, saying private employers added jobs in October for the first time since July, but hiring was modest relative to what we saw earlier this year. Now, this report carries a little bit of extra weight since the government's official jobs data for September and October is still delayed due to the federal shutdown. Now, that means that the Fed will be watching private data like ADP's reports more closely and using those when they're making their policy decisions. So, Chairman Jerome Powell, actually said that there's no risk free path ahead and made it clear that another rate cut at the December 10th meeting is not a foregone conclusion. So, October's jobs data isn't really strong enough to change the Fed's current course, but it wasn't weak enough to demand a cut either. Now, opportunities do remain in housing. Cotality's Home Price Insights report showed home prices slipped about zero point 0.2 in September, but are still 1.2% higher than a year ago. Now, the more interesting part is the new forecast. They're predicting 4.1% home value appreciation over the next year, up from that 3.9% in their prior report. That is a lot of equity gained for a lot of people. So that improvement likely reflects optimism for slightly lower mortgage rates, as well as a bunch of pent up demand from would be buyers who've really been sitting on the sidelines the last few years. Now, remember, real estate continues to be one of the most reliable paths to building wealth. For example, a $500,000 home appreciating at 4% adds $20,000 in value in just 1 year, and that's before you even account for principal reduction or tax benefits. All right, holiday lovers, who's ready for the family hack of the week? Now, this one is a perfect fall treat. It's all about celebrating National Bread Pudding Day on November 13th. And it's not only one of my favorite desserts, it's also the one that I have screwed up and failed at making the most. Well, this amazingness is actually an apple cinnamon bread pudding that makes 8 servings and it fills your whole house with that warm, cozy holiday smell. I'll go ahead and drop the full recipe and the step by step instructions down in the description below so you can try it for yourselves this week. All right, let's go ahead and get back to the numbers here. Here's what I want you to look for, or what we're going to be looking at this week. Because of the shutdown, several key reports like inflation and retail sales, they're probably going to be delayed again. And yes, that's right, folks. I did say that I thought that we were going to see the government open up late last week, and I was wrong. Anyway, uh, the reports that we will still get are going to be updated home price data from ICE, the NFIB Small Business Optimism Index, and two important Treasury auctions, the 10-year note on Wednesday and the 30-year bond on Thursday. Now, those auctions could influence yields, and that means rates, depending on investor demand. All right, for a little bit more of a breakdown on the technicals for this week, what we were really hoping to see this morning was for mortgage backed securities to open either in this squeeze again above the 50-day moving average, but below the 25-day moving average, or hopefully above that 25-day moving average, because outside of that 25-day moving average, there's really nothing stopping us, at least from the standpoint of a ceiling of resistance, all the way until we get to this Fibonacci line at 101.83. So that was kind of the day we were hoping for. Unfortunately, when we opened below this 50-day moving average that was acting as a floor of support, that floor now becomes a new ceiling. And our next floor of support becomes this Fibonacci line here at 100.71. So it's likely that if we open below this 50-day moving average again, that's going to give us kind of that bearish formation. We could see a little bit of weakness all the way down to that Fibonacci line. So again, if we do see mortgage-backed securities open above this line here, that could be a really good day for us. So if you're floating, you might want to make sure that you're in close communication with your lender and kind of watch the market, what it's doing tomorrow. Now, from the Treasury standpoint, it's kind of the same but opposite. We saw right here, where this moving average was kind of acting as our ceiling. It actually kind of became a floor whenever they broke through here. But we were hoping to see treasuries open below this moving average right here. That would have kind of trapped them between this being the new ceiling and this being their new floor. With them opening above this 50-day moving average, that made this Fibonacci right here the next ceiling of resistance. So what we're looking for from a mortgage rate standpoint tomorrow is going to be for treasuries to open below any of these moving averages so that that becomes a new ceiling and hopefully caps them and allows mortgage-backed securities to go ahead and get a little bit of a rise. All right, friends, that wraps up this week's market update. If you found this information helpful, please like and subscribe and share with anybody who's thinking about buying, refinancing, or just likes to learn how the clock works. I'm Doug Shoemaker with the Shoemaker Loan Team. Thank you so much for watching, and I'll see you next week.